Welcome to your weekly market update where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in it. First off, let's talk about housing. The Case-Shiller Home Price Index, which is the gold standard for appreciation, show that home prices rose 0.6% in July. Home prices have been on the rise since January and are now up 1% from last year and 0.6% above the June peak in home prices from last year, setting a new all-time high in home values. Many of the cities like Chicago, New York, and Cleveland are leading the way in home price gains. Looking at the top 5 appreciation reports in the U.S., since January, appreciation has been on the rise. And according to Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow, home values are setting all-time records, surpassing the peak from last year and more than recovering from the downturn we saw in the second half of 2022. Remember, home prices rose 9% in the first half of 2022, fell 3% in the second half, and completed the year at 6% appreciation. In 2023, they are on pace to appreciate 5 to 8% based on their pace through July, depending on the appreciation report. Now, existing home sales, which measures closing on existing homes, show that sales fell 0.7% in August to 4.04 million unit annualized pace, which was slightly weaker than expected. On a year-over-year basis, sales are down 15% still, so activity is still very low. The pace of sales is being kept down by inventory, which we're all seeing, which is at roughly half the level that we saw in 2019, and that time inventory was still tight. There are 3.3 months supply of homes, which is again tight because 4.6 months is considered normal, and that number is even lower when you take out existing inventory that is under contract already. Homes remain on the market on average for about 20 days, and the FTHB accounted for first-time home buyers were accounted for 29%, cash buyers 27%, and investors 16%. If the home is priced correctly, they're selling fast. As for mortgage and inflation, last week the Federal Reserve left rates unchanged at current range of 5.25 to 5.5%. And the Federal Reserve stated economic activity has been expanding at a solid pace versus moderate in previous reports. Job growth slowed but remained strong versus being robust in previous statements. And overall, the Federal Reserve left rates unchanged as expected, but signaled one more hike over the next 2 meetings by the end of the year, pricing in only 2 cuts in 2024 versus 4 previously. Rates are staying higher for longer and updated their view on the economy. So they're looking at the economy is doing better. The MBA released that the mortgage application data for last week showed that purchases fell 2% last week as volume and are down 27% year over year. Interest rates are slightly higher from last week, coming in at around 7.375 on average, with rates now 1% higher than they were last year. We have some great first-time home buyer programs with down payment assistance and also below market interest rates. And if you already own a home and you want to take advantage of the equity that you built up, call me to go over your options. You can reach me at 847-942-1497. Thanks so much for watching and make it a great one. Bye.